Okay, my beautiful friends, here we go. This is my newest segment of Marcus A Look Ahead. It is Sunday, May 14th, 2023. First and foremost, a sincerely from the heart, happy Mother's Day to all my lionesses out here who are mommies. Mommies are just the best. Anyway, I want to get that out here because it's the freaking truth. All right, people, let's talk here. Let's just for a nanosecond, all right, maybe longer than a nanosecond, let's look back on this freak show of a market here. What do we have? I'm laughing. I can't stop laughing when I think about this stuff because it's just too sick. What we have seems to be, for now, a market that no matter what is thrown at it is defying gravity. Okay, why is this phenomenon occurring? It's very, very, very simple. When you have this kind of a situation of suppressed rates, it opens up a massive funnel for cash to make its way into the stock market. This is a classic bubble. I mean, and I'm talking about a hyper bubble on a magnitude that is just beyond belief. Again, we don't even know. I want you to ponder this, and I've mentioned this many, many times. We do not know where the bottom is when it comes to this market here. What we do know is the Fed jumped in here at Dow 6,000. That's when quantitative easing 1 started, then quantitative easing 2 and Operation Twist and all the propping up of this entire thing since the last meltdown. Okay, I've covered this so many times. This has created, not only a hyper bubble in the stock market, a hyper bubble in real estate as well, inverse bubbles to the downside. Gold, silver are in inverse bubbles here. Malinvestment, cash moving into things it should not be going into, out of places where it should be going into. It's astonishing, but this is exactly what you would expect to see in this kind of an environment. It's obviously deliberate. If you and I know that artificially suppressing rates inflates bubbles and creates distortions across the spectrum of asset classes, well, let me let you in on a little secret here. So does the Federal Reserve. You understand? Okay, this is all by design. You all know that, leading up to a big climax, which we're going to get. Now, with that said, despite the fact that this market seems to be defying gravity, okay, I sincerely believe there is a very, I'm going to say it one more time, very high probability that over the next 2 weeks, and there's no way to pinpoint this, all right? And I hate even going on a limb and saying, okay, this is a block of time, but it looks to me like this market is about to fall. Now, I am not calling a crash here. Again, the real crash that everyone is wondering about, that everyone is talking about, is not going to begin nor end in the stock market. It's going to be a debt market meltdown, meaning bond yields are going to spike in an uncontrolled fashion, and that's going to force bond yields higher, put pressure on the stock market like people have no idea. I mean, it's going to really be an epic moment. And cash is just going to move from one set of assets, going to bleed out of the debt market, bleed out of the stock market, hemorrhage is more the word, out of the debt market, out of the stock market. It's going to move into commodities and I believe also cryptocurrencies as well. Now, with regard to literal destruction or smackdown that we have seen lately with the price of gold and silver, I'm not sure this is done here, okay? We've seen some pretty epic moves. And think about, again, people, and I'm going to tell you, we're not talking about pallets of physical metals moving from one place into another. This is nothing but paper. It's not even paper. It's digits on a screen. They're not on the elemental chart. They don't exist. And this is how the metals market has been rigged for forever. The hard asset derives value from the derivative. It's not going to go on forever. It can't go on forever. It's impossible to do. But again, you understand how this is going to play out here. Debt market meltdown, stock market meltdown, cash moves into commodities. Now, again, going back to the SmackDown, it is certainly possible, people. I know how many of you get upset because believe me, I read my comments, I read my emails, oh, Greg, I can't believe they're doing this. Excuse me. Itchy nose again. Believe it. Okay, it shouldn't be a shock to you when you see smackdowns in the price of gold and silver. Remember, central banks only hold gold and have been hoarding it faster than ever as of late. They only do this because of tradition. You know how it's tradition? Do you know how you can be certain? I'm laughing. That central banks hold this only for tradition? Well, because former Fed Chairman Ben Bernanke said that. And if he said that, it must absolutely be true. How about no? No, it's not true. You know this. Anyway, we're not going to change a damn thing. So let's look back on the debt market as of late. We've seen these incredible gyrations as of late. What is that? That's instability. Instability in the debt market is a threat to not just the markets, not just obviously the debt market, but to literally our way of life here. Okay, a debt market meltdown is going to occur, and things are going to change very rapidly. A full-on debt market implosion, which I believe is coming down the horizon here, is going to cause a locking up of the entire financial system. You know this already. This is why I have said you need some cash on hand. Stash it somewhere. I don't know, a couple $1,000. Because in the event of a credit freeze, well, credit won't work. Your debit card won't work. Your credit cards won't work. The only thing you could use possibly would be, well, the barter system, quite obviously. This is why I always tell you, make friends with like-minded people you can count on in a situation where things would really get bad. And you always have to be ready for the worst case. Again, if it doesn't happen, you're all well and good. If it does happen, you're prepared mentally, spiritually, physically, financially, whatever. You got to take care of yourself. You got to take care of your family. You got to take care of people you love. And I do believe that we have a responsibility to each other as well. People who we don't even really know. You can never be too sure when you're going to meet your next best friend. You know what I mean? We're all part of the same family here, the human race. Okay, they want to divide us by sex, race, skin color, religion, whatever it might be. Pick something and they, whatever. But that's how they win, by keeping us divided. Understand? And this is why they put these puppets into office. What more divisive person than the current freak that we have there and Trump? These people are put up there, and Obama, they're all up there to keep the people in their little places, okay? You people have to hate these people because of whatever reason they're telling you, and that's it. The mainstream media, their job is to keep your eye off the ball. I'm going to sneeze. Oh, boy. Woo! And yes, I look exhausted. I drove for over 10 hours yesterday. I picked up my CUDA. Finally picked up my CUDA. I was in the shop for almost 2 freaking years. A full rotisserie restoration on my CUDA. If you want to see it, I'll place a link in the description of this video to my newsletter and a direct link to the pictures of the CUDA that I just placed. Anyway, people, so what have we set up so far? What's been happening here? Debt market instability. Now we have this issue with the banks, which is not gone, okay? The smaller banks, the regional banks, their issues are just getting started, and this is going to bleed off into the mega banks as well, okay? In a newsletter recently, I sent out all the derivative exposure to the banks. The top 3 banks here, Goldman Sachs, JP Morgan, Citigroup, over $150 trillion in derivative exposure alone, okay? If you add them all up, it's literally astronomical. It's numbers beyond my wildest comprehension here. So you can only imagine what this means. Again, look, this has turned into a freak show on an epic scale. There's nothing backed by anything anymore. What is a derivative? In case you don't know, if you're new here, a derivative is simply a side bet on an underlying asset. Now, just again, to allow you some deeper understanding here, you can have layers of derivatives to the upside and to the downside, many, many layers of them. So again, and this can't be quantified. No one knows what it is. It's kind of a massive unknown. It's a black hole. And when the system finally gets real, and it will, again, what are they doing? They're propping up the debt market, causing malinvestment. This is all by design, dismantling the current system. You all know this. All right, we talk about this every freaking day. What are you going to do about it? I don't care what they want to do to gold and silver in the short run. I think these are the greatest trades on the face of the earth. I'm going to show them to you. You see? Greg loves this stuff. He really does. Silver, my favorite asset of all time. Okay, I think it's the most undervalued asset on the planet, bar none. If you had to hold one thing and just one, and you know Greg Mannarino is into everything. I am spread out into muscle cars and real estate and all kinds of stuff. You got to be in my view, yeah, if you have the ability to be in many things. Okay, but if you had to pick one, it would be silver in my view. Okay, I think it's just the most undervalued asset in the world. Now, with commodities, all of them are going to skyrocket at one point. Now, with regard to energy, let's talk about energy as of late. We've been watching a pretty wild ride with energy. It looks to me that not too far off here, maybe several weeks as well, we're going to see a pretty significant rebound in energy. Okay, again, I'm looking at the charts that you got to interpret these things to the best of your ability. I look at these things every freaking day. It drives me nuts. But it does appear to me that energy prices are going to spike. So we have a few things that are going on here. We have a market that appears to me, again, looks like it's about to fall. I am talking about a correction, not a crash. A correction, not a crash. Because why? The real crash is going to start and end in the debt market. It's going to begin with a spiking in the debt market. You're going to see the Mannarino Market Risk Indicator, free to you, free to me, free to everyone, the MMRI, link in the description of this video, spike to highs that people aren't going to believe. We're sitting at about 221. If you're new here, you need to follow the MMRI. Okay, again, it's free, 100%. Link in the description of this video. When you see that spiking, all right, we know where the red lines in the sand are. 250, first red line in the sand. 300 is a big, dark, ugly line in the sand here. All right, we know what happened with Nick the Pig and Mary Dolly, and they floated them out, and the market, was talked down. All right, but so we have our lines in the sand. We know what to expect here. So with that said, I think we covered a lot in this video here. We know where this, look, nobody, and I mean nobody, has a better handle on what's going on than you. All right, I work my tail end off here to bring you what I believe is what you need to know, actionable, what you need to do. Not just sit back and suck your thumb, wondering what you should do about it. You know what you should be doing about this. Betting against the debt, becoming your own central bank here, loving each other, caring about each other, becoming charitable, making friends with like-minded people. Look for support because this is going to unfold in a hideous way. And it's not, again, by accident. Is this going to be a worst-case scenario? Very well could be. Should you be prepared for it, as I always tell you all the time? Absolutely. Because if we don't hit it, great. You're still better off. Could you really, look, what do you want to do? You want to stay in the dollar here? You want to, not at least try to protect some of your wealth by being in hard assets here and having, look, I know how many of you despise cryptocurrencies, but how difficult would it be for you just to take a little bit of your cash and just pick one, pick the mother of them all, which just happens to be Bitcoin, okay? I'm not saying to, over leverage yourself. You just have a little bit later on. If it really would hurt you to do that, then obviously don't. But if you have a few dollars laying around and you just say, hey, you know what? I'm just going to throw a few dollars in this and just ride it out, because I sincerely believe cryptocurrencies and commodities are going to skyrocket when the debt market melts down. And again, look for a credit freeze, a locking up of the system here. Have some cash on hand. You understand? Hey, that rhymed. It's important because you got to be ready. That was the real issue, in case you don't know. In 2008, why the massive, what was considered massive capital injections into the market at that time, which would be like a walk in the park today? It was to free up the credit markets, to get credit flowing. Businesses, interbusiness lending had stopped. This whole thing was really about to implode on itself, and the credit system was about to lock up. That's the real reason why those capital injections into the system were done, okay, to free up the credit system. And the whole system is based on, you see, it's an interesting play on words, credit. Credit is debt. What's this debt ceiling really all about? It's a promise to borrow more. I told you people on Friday, we have an opportunity, which will never happen, to take down central banks. If in fact we were to breach the debt limit, if in fact we were to default on the debt, that would be a major step to shutting down the Federal Reserve. Okay, The Federal Reserve and every other central bank in this world, power resides in one thing and one thing only: their ability to issue debt, their ability to inflate. They call it credit. It's debt. You understand? You take that away from a central bank and they die. They die. Okay? But this will never happen again because the outcry would be too great. People's investments would be... If we do see a debt default here, forget about what's going to happen to the stock market. You're going to see a spike in the 10-year yield. The MMRI could probably jump to 400 to 500. That's why I'm telling you, right now we're sitting at 221. Look at the MRI, link down below here. I mean, who knows? This can really get... That's the real issue, is again, a debt market meltdown here. And of course the Fed would try to prop this up. You would watch the Fed's public balance sheet go absolutely parabolic in an event like this. So that's another thing you need to keep your eyes on here. But you got all this down. I mean, I believe that those of you that have been with me for a long time, and many of you have for years, decade, some of you as long as a decade, maybe longer than that, you know what's going on. You know what you're doing and you know why you're doing it. You're not some kind of freak walking through space and time not having a clue as to what's going on. You understand? You know what's happening. And that makes me very happy. All right, people, what else can I tell you here? You know what to look for, all right? You'll see me in the morning. Let's keep our eye on this market over the next couple of weeks. It looks like a big event's going to occur. Again, not calling a crash here, but this market needs to drop. With regard to the debt market, keep your eyes on the MMRI. Watch the 10-year yield. Watch the relative strength of the dollar. I will keep you on top of this, as I do every day, twice a freaking day. Twice a day. 5 days a week, and then once on Sunday. All right, anyway, look, people, this guy here loves you a lot. Check out my CUDA if you'd like to see it. Link below here. Love you a lot. If this video was interesting to you, please, that thumbs up is so important. It really, really is. It lets people see the video. YouTube likes to see that. You give the video a thumbs up, all of a sudden people can see it. You understand? See you in the morning. Love you all. Have a great day. Happy Mother's Day again. Mommies are the greatest. And just call your mother today, okay? Call your mother today. Even if you haven't spoken in 10 freaking years, give her a call. All right, tell her you love her. All right, I'll see you later, everybody.